Hey everyone, and welcome to The Explainer. If you're anything like me and you love geeking out over financial markets and trying to make sense of all those daily shifts in precious metals, well, you're absolutely in the right place. Today, we're putting the spotlight squarely on silver. We're going to unpack the latest prices, dissect the hidden mechanisms driving the market, and give you a really clear map of what to watch in the days ahead.
But, before we get into the hard data, we really have to start with the big question that's probably on every investor's mind right now. Why exactly is silver making moves today? I mean, it's not just random market noise, right? Silver is actually caught in this fascinating web of global economics, industrial innovation, and shifting investor sentiment. It's a lot to unpack.
So let's dive right into Section 1, Current Silver Prices. Right out of the gate, here is the anchor point for the entire global market. As of today, the international spot price of silver is trading at right around $58.40 per ounce. And whether you're a massive institutional investor or just a retail hobbyist, $58.40 is the baseline, dictating the mood of the market today. But as we know, a global benchmark doesn't always reflect your local reality.
Translating that international spot price into physical local realities gives us a slightly different picture. Currently, the price per gram sits at 582 rupees. For 10 grams, it's looking like 5,825 rupees. And per Tola, you're at 6,794 rupees. But remember, guys, these aren't static numbers carved in stone. They are constantly reacting throughout the day to global market activity, demand shifts, and crucially, currency exchange rates.
All right, moving right along to Section 2, Macro Forces Driving Silver. Think of this like a massive global tug-of-war between the US dollar and silver. Because silver is traded globally in dollars, the two are locked in this deeply intertwined inverse relationship. A weaker US dollar essentially acts as a launchpad. It supports higher silver prices because, well, it makes the metal cheaper for investors holding other currencies. On the flip side, a stronger dollar flexes its muscle and puts downward pressure on silver. You really just cannot predict one without watching the other. And that tug-of-war feeds right into our next massive macroeconomic driver, which is the Federal Reserve's interest rate policy. Basically, think of this as a seesaw for silver demand. When the Fed hikes rates, it drains demand away from precious metals, as investors naturally migrate toward assets that actually pay out interest. But when that seesaw tips toward lower rates, suddenly non-yielding assets like silver look significantly more attractive to buyers.
Which brings us to the third piece of the macro puzzle, inflation. Now, you already know about silver's historic role as an inflation hedge. When the cost of everyday goods rises and fiat currency depreciates, capital immediately seeks out a safe harbor. Investors buy silver as a physical, financial shield, basically relying on its centuries-old ability to hold value when paper assets start to falter.
Let's shift gears now to Section 3, the industrial demand. You see, silver's value isn't just about bars sitting quietly in underground bank vaults somewhere. It is a highly conductive, absolutely indispensable backbone of modern technology. We're talking solar panels, electric vehicles, complex electronics, medical equipment, and advanced batteries. They all rely on it. Just to put that into perspective, a single EV can require nearly 2 ounces of silver. That's way more than a traditional combustion engine. As these green energy and tech sectors continue to boom, the baseline industrial demand for physical silver is staying incredibly strong.
And that leads us to our final act, Section 4, Future Market Outlook. So, taking the temperature of today's market, conditions are actually surprisingly balanced. I mean, after reaching some pretty significant recent highs, we aren't seeing a massive panicked sell-off. Instead, silver is stabilizing within a very healthy range. Honestly, this is a highly bullish indicator. It shows that buyers are still actively participating and the overall sentiment remains super robust.
But, stability today doesn't exactly guarantee smooth sailing tomorrow. If you want to anticipate short-term volatility, you've got to keep a really close eye on upcoming U.S. economic data. I'm talking inflation reports, employment numbers, and Federal Reserve announcements. These are the tripwires. A surprise in literally any of these categories can instantly jolt the market and send silver moving aggressively in either direction.
So, taking all these competing forces into account, the dollar, the interest rates, inflation, and all that booming industrial tech, where is silver heading next? We are truly standing at a crossroads for the upcoming trading sessions.
Based on the current neutral to slightly bullish outlook, we can see 2 clear paths. In a bullish scenario, which would be driven by a weakening US dollar and a surge in safe haven demand, silver definitely has the momentum to break higher.
Conversely, in a pullback scenario, well, if economic reports come in super hot, boosting the dollar and raising rate hike expectations, silver could very easily experience a short-term correction before resuming its broader trend.
But zooming out past this week's volatility, the long-term outlook for silver continues to show just immense potential. And this optimism really rests on two enduring pillars: the relentless industrial demand from the green tech revolution, paired directly with ongoing global economic uncertainty that just continually drives investors back to precious metals.
Which leaves us with one final thought to ponder. We essentially have two titans pushing silver forward right now: human innovation, demanding unprecedented amounts of physical silver for tech, and human anxiety, pushing capital into historic safe havens. So in the years ahead, which of these two powerful forces will ultimately be the primary driver of silver's long-term